All right, let's get right into it. Today, we're unpacking a really detailed blueprint for investing. Think of it as an operating system designed to swap out all that emotional chaos of the market for a calm, repeatable process to build wealth over your lifetime.
So, does this sound familiar? You're constantly bombarded by breaking news, you're chasing the next hot stock, you find yourself making decisions out of fear when the market tanks and then greed when it's soaring. If that constant noise makes sticking to a plan feel, basically impossible, you are not alone. That's the default for most people.
So, what's the fix? Well, the idea we're digging into here is this concept of an operating system, or maybe a master prompt for your financial life. This isn't about short-term speculation, not at all. It's a system built for one thing: the disciplined, long-term ownership of seriously high-quality businesses.
Okay, but before we get into the how of it all, we really have to nail down the why. This whole framework is built on a very specific philosophy, a set of 5 core beliefs that pretty much act as the source code for every single decision you make. Think of these axioms as the non-negotiable rules of the game. They define the mission. They're designed to completely shift your mindset away from being a short-term trader and into the mindset of a lifetime business owner. It's a huge shift. So the very first axiom forces this massive identity shift. You are not flipping stocks. You are collecting assets. Your job is to just consistently add to your ownership stakes over a very, very long time. You're a collector, not a gambler. And right off the bat, this sets the timeline. This is not some get-rich-quick scheme. The whole system is explicitly designed for a multi-decade journey. The real magic here comes from patience, from letting great companies just do their thing year after year after year. Slow, but absolutely relentless. You know how they say, defense wins championships? That is exactly what this is about. This framework sees your own emotional impulses, that tendency to panic or get greedy, as the single biggest threat to your success. Avoiding the big, dumb mistakes is way more important than chasing some risky, oversized gain. Now I love this one, because it celebrates being boring. And why is that? Because in investing, excitement usually means you're making emotional mistakes or chasing the latest fad. A boring, almost robotic, completely unemotional process is what actually delivers consistent results in the long run. And this just gets right to the heart of the whole philosophy. Forget trying to predict the perfect second to buy or sell. It's a loser's game. The most critical factor by far is just owning great assets. Time in the market will always, always be trying to time the market.
Okay, so we've got the mindset down. That's the foundation. But the big question is, how does the system actually find these high-quality businesses that are even worthy of a long-term commitment? Well, let's look at the super strict hierarchical process it uses. It's a 4-step filtering process. And listen, the order here is absolutely critical. It all starts with earnings. If a company can't pass that first gate, the analysis is over. Done. You don't even look at the other metrics. Only if it passes that first test do you move on to return ratios, business model durability, and then finally balance sheet strength. And here's the core logic that powers that whole selection process. A stock price that's soaring with no actual profits to back it up, that's just noise. It's speculation. But a company with strong, growing profits whose stock price hasn't really caught up yet, now that is what this framework considers a real opportunity. So let's talk about that second filter, because the bar here is unbelievably high. The framework demands that a company must have a return on equity and a return on capital employed of at least 20%. This is designed to filter for only the absolute best, most capital-efficient businesses on the planet, leaving you with these highly scalable, asset-light machines. So once you've actually found a company that makes it through that tough filtering process, how do you buy it? This is where the framework gets rid of those big, emotionally charged lump sum decisions and replaces them with a methodical, rules-based process.
And this visual just says it all, doesn't it? On one side, you've got the total chaos of emotional investing. On the other, you have this calm, steady, methodical process. The whole goal is to turn the act of buying into a habit, not an emotional reaction.
And it does this using 4 distinct modes. In sniper mode for normal markets, you just make small, fixed daily buys, no matter what the price is. Balanced is the default, with slightly larger buys and small adds on down days. Aggressive is like a short-term surgical strike when there's panic in the market, and ultra-aggressive, that's for the really rare black swan events. The point is, the rules, not your feelings, dictate how you act.
Now, the framework is really smart. It knows that the single greatest risk to any system is the human being running it, right? It's us. So it has built in guardrails specifically designed to watch your behavior and enforce discipline. And this brings us right back to one of those core axioms. Your emotional discipline is just so much more valuable than how smart you are. I mean, you can be the smartest analyst on earth, but if you panic and sell everything during a 30% drop, none of that intelligence matters one bit. So the system has a built-in circuit breaker. If it detects that your behavior is getting a little shaky, maybe you're trading too much or trying to override the rules, it automatically steps in. It doesn't sell your stuff, it just slows you down, dials back your mode's aggressiveness, and forces you back to that boring, repeatable process. And these are the hard and fast rules for survival. The framework is crystal clear. You never, ever borrow money to invest. Your emergency fund is sacred. You don't touch it. You build your positions gradually, and you only concentrate your capital after a company has proven itself, quarter after quarter, through its earnings.
So after all this discipline, all these rules and filters, what is the actual payoff? The end game isn't just about a number in your account. The system is really asking you to make a conscious, deliberate trade-off. This right here is the grand bargain. You have to accept that there will be volatility. You have to accept that your portfolio is going to go down sometimes, maybe for a long time. But in exchange for accepting those realities, you get something profound: long-term survival, the awesome power of compounding, and maybe most importantly, peace of mind.
And that really leaves us with one final big question to reflect on. Look at your own approach. Is it just a random collection of assets reacting to whatever is happening today? Or is it a resilient structure, carefully designed to withstand market storms and your own emotional turmoil for decades to come? Are you building a portfolio, or are you building a fortress?